But guys, good evening, everyone. This is welcome back to another episode on the YGJ or Young Girl Journal. So in this live, I'm going to be sharing some of the narratives I have and some of the trades I've had this week and the past week because I haven't been uploading for quite some time. But yeah, I'm back. And in this live, let me first do something here. So basically I trade. I've been watching four pairs. That is the stock indices, that is the Nasdaq or the US100, US30 or the Dow Jones, and then USDJPY and GBPUSD. Those are the assets I actively trade. So in this live I'm going to be going over some of the trades and see if we can get any setup, but well, US30. Okay, I don't know why, but my network is really slow and lagging because this stream was supposed to begin at 8, but it's because of my network. It has been disturbing me quite a lot, but let's just go with that. So as you can see here on the Dow Jones or US30 chart, we are currently on the 4H, as you can see here. Let me use this demonstration thing. Yeah, so we can see that we had coming into this week, which began from this point here on Monday 13th October, and then also if we had to have a review from last week, we can see that price started shifting. It has been bullish, as you can see the trend this side. The institutional order flow has been quite in a bullish trend. As you can see that price has been making higher lows and then higher highs. You can see here, so it has been bullish. But then at this point here we started like shifting to a bearish sentiment. As you can see here, we had this market structure, we had this short-term lows here, and then we had this intermediate low. And then when this intermediate low was taken out at this point, that's when I started looking for shorts at this point. Though I remember this Friday, this is that time when I think price dumped like over like 1,000 points in both the Dow, Nasdaq, everything, and then also crypto. Though I don't trade crypto, but apparently, according to the news, they say that Trump was trying to impose the 100% tariffs on China. Was it something of the earth something. But yeah, so the moment I saw that we had this intermediate low was taken out, so normally what I've learned from ICT or ICT market structure is that whenever we see like we have been in a bullish trend and then we have these areas of intermediate swing points, you never want to see price take them out if we are in a bullish trend. You can see here we had one here, we had this short-term low and then a short-term low on its right, and then a short-term low on its left. So we had this intermediate low, and you can see if we are to assume for a moment that the price action from this side to this side wasn't there, you can see that when we were bullish, this wasn't taken out. Again, we had another intermediate low at this point here. As you can see, we have this short-term swing low and then another short-term swing low here, so it makes this an intermediate low. So again, it wasn't taken out. Same thing if you're to study the price action up to this side. Yeah, so basically that was it. Let me label this as an intermediate low point. Yeah, so when you see like when price starts taking out these intermediate lows or long-term lows, a long-term low now for it, the difference between an intermediate low and long-term low is that for a long-term low, instead of it having like short-term lows on both its left and right, it rather has intermediate lows, swing points on both its right and left hand side. So if these were instead intermediate, if these STL stands for short-term low, they were instead intermediate low or ITL, then it would make this intermediate low a long-term low or LTL. Yeah, basically that's it. So when you see price begin taking out those areas, those swing areas, those swing points rather, it's an indication that probably we are going to see a shift to the opposite market sentiment. Like if we have been in a bullish sentiment, then there is a very high chance that we are going to, shift to the opposite, to a bearish market structure or a bearish market sentiment, as you can see here. And we can add on other confluences that like the SMT divergence, things like, is it like a non-OTE or is it like in a premium? But then if this is actually for all of them, even Nasdaq, they have been making all-time highs, so I don't think we could use that OTE thing here. The OTE in full is optimal trade entry. So basically you can see the correlation between amongst all the three indices. They have been like going high and they are poised to go high, as you can see at that point. So basically when I saw that that you can see at this point here, we also had an SMT divergence here between NQ and this high here. You can see that this and divergence is like a breaking correlation. It's like, you know how correlated assets, they're not normally supposed to be moving in the same direction. Like if they are positively correlated, then they would be moving up, both of them would be moving up, and if they are moving down, they are both moving down. So normally when there is that break in correlation, that's what they call the SMT divergence, and it's a confluence that can make us know, like, it can indicate that there is going to be a short-term reversal to the opposite trend we have been having, like to the we are in a bullish, then it went to a bearish sentiment. But then you can't only use the SMT divergence on its own. It has to, you must have already had a narrative in mind. You can't just use it alone. It's not a good idea using it alone. Like, you just see it and then you straight away know that it's going to go to the opposite direction. No, that's not right. But yeah, so basically that's the whole idea about SMTs, and you see me use them again at this point here in today's price action. Yeah, so let's see. Yeah, so I'm still trying to explain the market structure here. Let me first remove this, and I first focus on this chart on the Dow or US30. So as I told you, yeah, normally me, what I look out for when I come to the charts, I first look at on the daily time frame and then the 4H. So for the daily and the 4H, they normally give me like an idea of where market is, using like market structure. Like, I look at the market structure, I look at the intermediate term swing points, the short term swing points, long term swing points. Are we in premium or a discount? Yeah, so that's what I look for in the daily and the 4H. And then also I look out for, like, after framing the dealing range I'm in. Now a dealing range is like, it's what indicates that we are either in a discount or premium. So basically this would be an example point. So for this case, we have this intermediate low here, and then we also have this intermediate high at this point there. My network has, oh yeah, let's come back. Yeah, so we can see at this point here, this swing low is this is an intermediate, this is an intermediate low. We can see that we have let me first remove, we can see that at this low here we had a short-term swing low at this point on its right, and then another one this side. So that made this an intermediate low, right? And then also at this point here we have this intermediate high or ITH, because we had short-term swing points on its left and then a short-term high on its right, as you can see. So that's why I'm using these two swing points to anchor my Fibonacci and get the dealing range. So let me put back the thing, as you can see, from there to there. So basically if we are to see, I'm going to remove these lines and yeah, we can see this 50, this green level is the 50% or the equilibrium. Let me put the values on the right. Okay, that will work in the middle. Exactly, that's what I want. So we can see that yeah, we have these quadrants. So basically we have the equilibrium, and everything above the equilibrium is deemed as a premium zone, and then everything that is below the equilibrium, or this 50%, is deemed as a discount level. So what I look out for are like the premium discount arrays, or abbreviated as the PD arrays, the ICT PD arrays. So some of those arrays we have order blocks, fair value gaps, breaker blocks. We have these premium weeks, discount weeks. We have volume imbalances, liquidity voids. There are very many, but the ones I normally use are fair value gaps, order blocks, breaker blocks, and then the liquidity voids. Though for the liquidity voids, you hear people talk of new week opening gaps, new daily opening gaps. They are also, I would say, kind of volume imbalances or liquidity voids in a way. But yeah, let me just first do this. So normally when we are in premium, we want to sell because now price is like the way you hear the word premium. When you have like something at a higher price, then you'd want to sell it at a higher price. You wouldn't want to sell something at a lower price. So that's why we always look for sales in the premium zones, and then we look for buying opportunities in the discount zone below this equilibrium level. Yeah, so I had this this. Now if you're to go back to this trade, this was today's trade here on the M15. We can see that we had the dealing range on the 4H price was currently in premium. So I'm going to go to the 15-minute time frame and we see what happened. Yeah, so let me see. It's going to come. Network is really slow. I'm sorry about that, but probably we shall subscribe to Starlink. They started rolling out, the services. Probably it would be better. Yeah. So the chart has loaded. As you can see here, sometimes in Uganda, not Ugandan because I live in Uganda, but according to the ICT concepts, I follow the UTC minus for a standard, like to follow up with his things or concepts. Yeah, so basically we can see that here on the 15-minute we had the MSIBI. CB in full is a sell side imbalance, buy side inefficiency, which means like when you see like these big down close candlesticks, like this one here at this point, it means that there's the reason as to why it's called a sell side imbalance, buy side inefficiency, is that there's too much selling in that buyers were like there's inefficient buying. That's the best way I can explain it. That's why it's called sell side imbalance, buy side inefficiency, because there is inefficient buying and then sell side imbalance. Like, yeah, so according to ICT, according to the IPTA algorithm, bank price delivery algorithm, which moves these markets according to the ICT concepts, they do mainly two functions: to deliver price to deliver liquidity, that is either buy side liquidity or sell side liquidity, and then rebalance areas. The second function is rebalancing areas of inefficiency. So some of the examples of the inefficiencies we have the fair value gaps, the liquidity voids or volume imbalances, new week opening gaps, new day opening gaps, etc. Then for liquidity, we have buy side liquidity, which is normally above equal highs or above like a high. Like at this point here, this would be above this swing high here. There would be buy side liquidity above that point there, and then below this low there would be sell side liquidity, or if we have two lows, then there would be relatively equal lows. So basically that's what the algorithm does. So that's what I normally look for in the market. Either what I look at market structure, I look at imbalances, liquidity, mainly those, and then also the dealing ranges. Are we in premium or discount? Basically that. So, and then also correlation between correlated assets to like guide me and, you know, help me know if maybe we are going to have, like, when to avoid certain market conditions, as I'm going to show you shortly. Yeah, so here we had market open, like this is the midnight true opening, ICT opening time, this at this point here. And then we had price retrace during the London session. The London session, if I'm to put this thing that shows the time zones, it's going to come in a few, yeah. So we can see that we had during the London kill zone, open kill zone, OKZ means open kill zone, London open kill zone. It opens at, the actual London session opens at 3 a.m. But then the London open kill zones, the ICT kill zones, they always begin an hour before the actual session openings. Now, like here, the session opens at 3, but then the ICT kill zone is 2. Is at 2, so it's 1 hour earlier than the actual session opening. So yeah, that's what we had during the London session. We had US30 move up, taking out the buy side liquidity above these Asian highs. Remember we said that liquidity above highs is called buy side liquidity. Yeah, so we had that, and then at around now for the New York open, the ICT New York open kill zone begins at 7 a.m. at this point here, as you can see here. Up to 10. Yeah, so New York open kill zone. So we can see that it took out both the buy side liquidity that was lying above this London open kill zone at this point here, and yeah, we started moving. We made a market structure shift to the downside at this point here. A market structure shift, or MSS, you see me abbreviating it as MSS on my charts, like something of a sort at this point here. MSS. No, why this thing is lagging? But yeah, market structure shift is like when we have like a displacement. We had like something of a sort, like we have price has been moving like in an uptrend, you know, and then it reaches a point, it does this, and then it takes out, it does that, right? So basically this is what a market structure shift is. It comes, it takes out this high, and then takes out this low here. In this displacement, it takes out both the high and the low of this price leg here. That's what a market structure shift is, and you can see that it happened at this point here during the New York open kill zone. At this point it came, swept, made a stop hunt to the buy side liquidity above these session highs, and then it started dropping. We had this, at this point here, we had this fair value gap, as you can see on the 15-minute M15 CB. And if an asset is like really weak, normally if it's showing like signs of a very low resistance liquidity run, it will not come up to this upper half. It will just, you know, come down respect, like the bodies will, it may wake up to this side, but if you see like the body is closing in the lower half of a fair value gap, then that's a good sign that it's really weak or it's really bearish. Or if it's staying in the lower quadrant, though here I haven't marked the lower and the upper quadrant. Yeah, so we had it accumulate at this point here during 9:30. 9:30 is when the New York stock market opens, or the equity, they call it the equity opening. 9:30, that's the time when it opens, and there is normally a lot of volatility around that time. And yeah, so we had it accumulate, but it all makes sense because you can see that overnight, like during the London session, it was in a large range. So obviously after that session we'd expect some kind of, high resistance liquidity runs. If I can take it to a lower time frame, it would make more sense, like the 5-minute or the 1-minute. Yeah, you can see here, let me first remove this. Yeah, I can see here at 9:30 it opened, and then it was in a very high liquidity, in a high resistance liquidity run, which I'd say it was basically in a seek and destroy, because there is a difference between a seek and destroy and high resistance liquidity run. For a seek and destroy, it's normally like it's in a kind of a consolidation or accumulating around the equilibrium. Like if you're to draw the dealing range of maybe of some significant swing points, then it's normally like 50%. But then for high resistance liquidity run, it may be moving, it may be trending, or like one-sided, but it's not respecting, like it's spending a lot of time in PDRs, like let me say a fair value gap, and then it comes, it taps in it back again, like a lot of, very many times. That's an indication of high resistance liquidity runs. And to beginners it wouldn't. Okay, ICT says he advises not to avoid high resistance liquidity runs because they are normally frustrating. That's what I can say. You can be holding your trade, like let me say at this point here, you've opened a sell position, you've put your stop loss here, and then maybe you're targeting the previous daily low, which is this point here, because it's also a major area of liquidity. Sorry, this was it. Yeah, so you can see that price keeps on coming back to your entry. So it's kinda, I'd say, for a person who doesn't have enough experience in the market, say they may get scared and get out before the actual move comes in. Now this can also be called the time distortion. Here, when price was like, in a high resistance liquidity run or accumulating and doing these things, it waits for like a specific time, which ICT calls time distortion, where it will like move in its intended direction at once without like making those, without like in one go. That's the best way I can put it. Yeah, so basically that's what we had on US30, and I missed out on this entry because I was trying to set up this OBS software. But this was the whole narrative. Remember, we started from the higher time frame. I looked at the higher time frame. It's in a premium. On the 4H we are in premium. Then also the market structure is showing that we are shifting to a bearish sentiment. So obviously also in these lower time frames I would be looking for a bearish setup or a sell setup. Yeah, so this is what we have here. We had, I'd say, some of the opportunities I would have for entry at this point here would be this point here, because I try to trade, I avoid trading before 9:30. I'd rather get my setups after 9:30 because there is a lot of volatility at this point. The volume like kicks in at that time. And then here we had a market structure shift to the lower side. Here you can see, if you were to consider the bodies, since these are CFDs, like the body closure at this point, this was higher, and then we had this low at this point. So it came, took out there, and then made the market structure shift at this point here, and then we had this fair value gap at this point, which is also this whole thing. It's the 2022, the ICT 2022 mode of the entry model, where you wait for market structure shift, then a displacement, and then you enter off of a fair value gap. So that would be one of the entries here, placing my stop loss at this intermediate high, and then targeting the previous daily low here, and it would have been a decent RR 3.53. That's good. So you can see that this was yesterday's price action from midnight, making this a PD previous daily low. Yeah, so you can see that price is still dumping. It is making retracements, but I think it's the same thing that happened on NASDAQ, because I looked at NASDAQ, it was also doing quite the same thing as US30, though for it. Yeah, I think here we can see, and I mentioned something called the time distortion. So a time distortion, I think there is somewhere in 2024 mentorship, ICT mentorship, where he says down, this one is moving up, like that is decoupled. Like you can see even here, okay, these two, NASDAQ and ES, or the S&P 500, they normally move in the same direction, but Dow kind of, it's not as clean as these two according to ICT, but yeah, I get good setups from it, so I don't have any problem with it. But yeah, so normally for it sometimes you may see that these two are going down, yet for it it's going up. So I would say like the correlation with these two, the correlation of US30 and these two is not, I would say, as much positively correlated, but in the long term, like in the long run, like long term, like lower higher time frames, they normally move in the same direction. They're always moving up, they're down, like yeah. Now at this point you can see that all the three indices were going down, right? So if we are to focus on these two at this point here, you can see that NASDAQ at this point here at 9:30, it was like, in a high resistance liquidity run while it was consolidating a bit, whereas this one was also in a high resistance liquidity run, but it was like going down. So meaning this one was in a high resistance liquidity run, but this one was in a like a stick and destroy pattern. And can take it to the 1 minute and we look at it. Yeah, you can see here this one was making this, then this one tried going down. Say these two were in the same conditions, but yeah, so normally after that decoupling phase, there is those assets normally get back into sync in a way that if maybe this one has been going down and this one is going up, or this one is going down and this one is accumulating, they get back into sync, and normally they will form an SMT divergence around that point, like as they are getting back into sync from the decoupled phase. I don't know if it's making sense, but something of a sort. Yeah, so you wait and see if it gives you an SMT divergence, and I think it did on the 5 minutes, because I saw it on the 15 minutes time frame. Let's use this point here, 9:30 opening. Yeah, we can see that here on Nasdaq. I'm going to first, okay, let me just leave on this. You can see that from this point, from that high to this one here, SMT, I don't know why it's delaying, but okay, at this point here you can see that for Dow, let me remove this line and also remove this one was making a lower low, rather sorry, this US30 was making a lower high, whereas at that same time window, in that same time window from here to there, this was making another narrative. Like you must have already outlined the narrative, you can't just use it alone, so I'm just using it as an added confluence to the entry I would have had at this point here. So at this point here you can see also US500 was making a higher high at this point here. Yeah, so basically that was it for this. And then after taking out the sell side liquidity below the previous daily low, or the PDL, it made a retracement to the opposing direction during the lunch macro. So the lunch macro begins at 11:30. Oh, actually it made the displacement lower, up to 130. So this was lunch macro, and then yeah, this was the equity opening, 9:30. Equity opening. Okay. And then 9:30, that's when the New York PM session begins. Yeah, so we can see that the AM session was basically in a high resistance liquidity run. It never made, like, this big move. And normally when it makes like those high resistance liquidity runs, then you wait for maybe the lunch macro or the New York much cleaner, right? As you can see here, it was much cleaner during the lunch macro. You can see here it moved down, took out the sell side liquidity below the previous daily low, and yeah, it made a retracement to this dealing range from this high to this. As you can see here, it went to the equilibrium, and then it has started going back down during the New York PM, the PM session. Yes. Yeah, so basically but normally according to what I've studied from ICT, the lunch macro is the one that is supposed to, like, let me say in the New York AM session, the AM session is also this time window it's actually from 8:30. Let me mark it here. Yeah, so this is the NYAM session. Yeah, so we begin from this point here, 8:30 to the lunch macro. That's the New York AM session. As I told you that the ICT kill zones, they are always like an hour before the actual session opening. Remember here, the equity opening at 9:30, it's at 9:30. But then his kill zone for, you know, the indices or the stock indices is at 8:30, which is 1 hour earlier than the actual opening. I hope that makes sense. Yeah, so we can see that it was pretty in a high resistance liquidity run for both, even for Nasdaq and S&P 500. They were both, you know, in that, and it all makes sense because in the London session you can see it was like one side, it was moving up. It was in a large range bullish move, as you can see here. And then here, when this happens, like when you have a large range move overnight, like from maybe the Asian session to the London session, you have like a large range, then it's advisable to avoid the morning session or the AM session for the New York and rather wait to trade in the PM session, because it may not be as clean. The morning session may not be as clean, but you'd rather wait for the clean setups in the PM session. So it's the same thing that happened here. As you can see, it was like in a high resistance liquidity run, and as I said, like some of the indications of high resistance liquidity runs, you find that the PDRA's time, where the price is spending a lot of time in PDRA's, like now this, the opposite of a high resistance liquidity run is a low resistance liquidity run. So for a low resistance liquidity run, what you normally want to see is like, you know, like at this point we had this CB. So for low resistance liquidity runs, price doesn't spend a lot of time in those, you know, inefficiencies or what. It like taps once and then goes, and it even leaves like, I would call it, it leaves those institutional order flow entry drill, like leaving only tapping, like let me say the lower quadrant of the fair value gap, and then it goes down, or even leaving a fair value gap open, like, and when a fair value gap is left open, it becomes it's called breakaway gap. Yeah, so we can see at this point here we had this fair value gap again, or the sell side imbalance, buy side inefficiency, CB. Again, it only touched the lower half. It even never came to the upper half. Same thing here, it just came to the cost quote encroachment, or 50% of that fair value gap, and then it started dropping. So that is an indication of a low resistance liquidity run, and that's when you want to you know, scale your capital. Like if I entered for an entry at this point here, then I can add on another entry at this point, rather another position, another sell position, because I know like price is really like weak and it's going to continue going down up to my target, as you can see here. So if to put back the thing, it would have been, sorry, this here up to this previous daily low, and then we also can add another, that's another block, or this only the very last up close candlestick before this downward move. So that would be an order block, this, and then again we had another one here, but then for this case we had two consecutive up close candlesticks, so all these two are order blocks. I'm going to mark it again. Then we had that order block there, Yeah, so we had this. You can see that here price came, respected it at this point here when it went back up, and then again it dropped. Like you can see all the optimal trade entry, rather those are signs of a low resistance liquidity run, as you can see here, again here. So but here it kinda went out of the lines, like though the bodies respected it, as you can see here, but the wicks made the damage. But no, the bodies told the story. Yeah, so that's the difference between a low resistance liquidity run and then a high resistance liquidity run. So for a high resistance liquidity run, you find that price will be spending a lot of time in like PD arrays. Now, like at this point, did we even have any fair value gaps in here? We never had any. But let me try seeing on NQ if we had one. Yeah, this point here. Yeah, so for high resistance liquidity runs, normally it even at this point here you can see this fair value gap. It's now, for this case, it's a buy side imbalance, sell side inefficiency, because there's buying something overside. But yeah, you can see that here, like price disrespects when you're in those high resistance liquidity runs. The reason as to why they are not optimal trading conditions is that you see your PDRA is not being respected, and you know it's like I'll just say it's frustrating. Then this inversion fair value gap was also not being respected. Like you see the bodies were even closing from below. It was spending a lot of time at this level here, and then after that, during the lunch macro, we started having the clean move, the fair value gaps being tapped only the lower half and then continuing downwards. We were leaving institutional order flow entry drills, leaving breakaway gaps at this point here. We had this fair value gap left open, and then again it came back, tapped on it here, and went as far as this order block there. Yeah, and it is still going down. So if one had missed the sale at this point here during the lunch macro, there's another chance to enter for another sale at this point here, because we retraced up to the equilibrium right here. If we were to draw the dealing range from here to here, so this is the 50%. Yeah, and it is still continuing down. Same thing with US500. They are all moving down, as you can see. During it's the PM session, so could go as low as, I don't know, for these ones, because I remember these ones I saw them, for them they hadn't hit their previous daily lows for Nasdaq and ES and S&P 500. Yeah, so we can see that for the previous daily low of the Nasdaq is at this point here. See, it hasn't hit it yet, so there is sell side liquidity at that point there. So PDL, so probably it could take out that sell side liquidity and then maybe retrace, and I don't know, maybe the closing macro to do USD